After touching a series of fresh 11-month highs this week, the gold price whipped into the weekend to end at $1,784 per ounce. That was just 50 cents shy of its level 2 weeks ago, which remains the highest weekly close since September 2011. Silver also rose against the dollar this week, hitting its highest level since late March, above $35 per ounce, and ending 20 cents above last Friday to record a London fix in the wholesale bullion market on Friday of $34.85. Priced in euros, however, both gold and silver struggled as the single currency rallied on the forex market. Eurozone gold investors saw fresh all-time highs hit on Monday, but by Friday afternoon here in London the price of gold stood at €1,366 per ounce, some €11 beneath last Friday's finish, with the price falling further as London trade due to the close. Like gold, the euro rallied against the dollar despite stronger economic data from the United States and sharply weaker data from the 17-nation single currency zone. Following September's announcement of a bond buying programme to support weaker Eurozone states, Thursday brought no change to European Central Bank policy at its monthly meeting. Friday then brought news of a nasty drop in German industrial orders and, shortly after, the US government said non-farm payrolls had grown by 114,000 jobs in September. That was what analysts had forecast, and the news also came with an upwards revision to August's data too. Yet a sharp dip in the euro and a quick $25 plunge in the gold price proved temporary. The euro rose towards the 4-month highs seen in mid-September. Gold quickly recovered more than half its drop to confirm what several analysts this week called underlying bullishness in the market. Joining the chorus of positive views on the gold price, California-based bond giant Pimco, which now manages $1.4 trillion of client money, this week published a bullish report on gold. Saying that gold has broadly held its real value for thousands of years, the report notes that supply is constrained but global demand is rising, especially amongst households in the emerging economies of East Asia. Last month's announcement of QE3 by the US Federal Reserve, they say, makes gold even more attractive as an investment. Western households, however, seem less concerned right now, some might even say complacent. This week, BullionVault launched its new Gold Investor Index, an indicator of private investor sentiment towards gold. It is based on real trading activity by the 42,000 people worldwide who have bought gold and silver on BullionVault, the world's largest provider of physical bullion to private investors. A reading of 50 means an equal balance of buyers and sellers, and rising from August's reading of 52.1 to a level of 52.5 in September, the index still lags last summer's record highs by some way. This suggests that private households in the West, who form the majority of BullionVault users, are less anxious about rising inflation or a new spike in the financial crisis than you might think simply by looking at the gold price alone. Next week, meantime, brings the Columbus Day holiday in the United States on Monday, with a raft of Eurozone and UK economic data due on Tuesday and Wednesday. Thursday then brings Euro nation inflation numbers for September, with US import and export prices later in the day. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.